So I have doubts about the credibility of China's recent GDP growth figures for quarter two of this year, where they came in at 5.2%. And it's the same questions I had when China officially reported 5.2% growth for 2023 and 4.8% growth for 2024. This doubt stems from a broad set of Chinese inconsistencies, contradictions, and non Chinese alternative data sources finding different outcomes. Analysts from institutions like Rhodium Group, the National Bureau of Economic Research, the New York Fed, and the Atlantic Council, along with various media and academic voices, have increasingly questioned the validity of China's self-reported numbers. One of the most glaring red flags is the contradiction between reported GDP and underlying economic indicators. The real estate sector, which directly and indirectly accounts for an estimated 20 to 30% of China's GDP, has been in severe decline since 2021 and even was reported to have slid further by 3.2% in just the past year. Property investment fell by over 10% in 2023, and this caused housing to drop by more than 20% over the following years. Despite this downturn, official Chinese GDP reports show that real estate is maintaining a steady contribution to their economy, especially in quarter two of 2025 and over the past few years. Those contradictions alone make China's numbers not just suspicious, but flat out wrong. At the same time, household consumption remains weak. Retail sales growth dropped from 8% in 2022 to just over 4% in 2023, and consumer pricing inflation is near zero, sometimes going into the negative, indicating deflationary pressure that rarely accompany robust economic growth. If real estate and consumer spending are both faltering, a steady 5% national growth rate becomes not just implausible, but laughably impossible. But why would they lie? Why would China falsify their numbers? Well, China's growth targets are not just economic guidelines, they're political imperatives. They draw in investors, and local officials are evaluated, promoted, or punished based on their ability to meet the stated target goals of the CCP. And this creates strong incentives to manipulate the data. And so the small town mayors falsify their numbers to look good to the Chinese Communist Party. And then the principalities do the same thing. And then when the principalities report up to the staff of Xi Jinping and his broader economic team, they then falsify the numbers. And then more than likely, Xi Jinping himself falsifies the numbers. So you have this stream of falsified numbers that starts at the bottom and then compounds upon itself. Although the Chinese National Bureau of Statistics is supposed to adjust local submissions to construct national GDP figures, research by the NBER has shown persistent overstatement. A 2019 study found GDP from 2010 to 2016 was likely overstated by around 1.8% per year. The Rhodium Group's 2024 estimate places real GDP growth between 2.4% and 2.8%, well below the official 4.8% figures, suggesting an ongoing inflation of economic performance measures by the CCP. China's GDP data appears unusually smooth as well, especially when you compare it to peer economies. The New York Federal Reserve and others have highlighted that China's quarterly growth exhibits abnormally low volatility, even during global disruptions like COVID-19, their property crisis, declining exports, and the current tariff regime. Meanwhile, open economies show fluctuations that reflect shocks, downturns, or recoveries, and they mirror each other. The US rate of change broadly mirrors that of Japan's, Germany's, or the United Kingdom's. China's GDP growth seems oddly insulated even for its region, raising suspicions that figures are adjusted to meet expectations rather than reflecting reality. It was particularly egregious when China seemed to have minimal declines during COVID despite having the most draconian lockdown policies. It is as if the CCP wanted their economic numbers to prove that their decisions on zero COVID were working and were actually making their economy stronger. The opposite was clearly true. When independent researchers use alternative methods like satellite recorded nighttime light emissions, rail freight volumes, shipping volumes, emissions data, or value-added tax receipts, they find markedly lower growth. A now famous study using night light data estimated China overstated its cumulative growth from 1992 to 2006 by up to 65%. More recently, Rhodium Group and the Center for Strategic International Studies estimate that the Chinese economy is as much as 10% smaller than officially reported, which amounts to a $1.7 trillion GDP gap. Transparency remains another problem. China releases its GDP figures faster than most nations, but rarely revises them, and the NBS does not publish detailed breakdowns of consumer, investment, or government contributions on a quarterly basis. So honestly, at best, what we are seeing is an estimate that is heavily redacted, and there's never any revisions or audits. The system's political alignment exacerbates the issue as well. The NBS reports directly to the Chinese Communist Party. Former Premier Li Keqiang once said GDP numbers were, quote, man-made and for reference only, end quote, and then went on to talk about how electricity consumption and freight monitoring as a more reliable economic indicator. Ironically, both of those things have been stagnant in recent years in China. Finally, Beijing's own economic actions appear inconsistent with the growth claims they are making. In 2024 alone, the Chinese government launched a 10 trillion yuan, or about $1.4 trillion, in local government debt restructuring programs. They issued these along with calls for, quote, extraordinary support and implemented interest rate cuts despite inflation being near zero. Such aggressive policy tools are typically reserved for periods of deep economic stress, not for supposedly thriving economic growth with a 4 to 5% annual growth rate. You don't bail out a booming economy. So when China should be celebrating such stellar numbers, the talk amongst economists both within and outside of China is of another stimulus later this year. That shouldn't have to happen if their numbers are what they say they are. Furthermore, key issues that we all know about, things like youth unemployment, which the government recently stopped reporting, a demographic crisis, falling productivity, and a structurally broken real estate model are underrepresented or completely absent from their official news releases on their GDP. So all the Chinese Communist Party seems to be releasing is the sunshine and rainbows. Nothing ever seems to go bad in their economy. Now, this isn't to say the data is completely wrong. It probably broadly captures some growth, but it's likely on the high end. The provincial and national data actually are converging a little better now than they were back 20 years ago, but it still shows that there's a gap between what China reports and reality. Since 1978, China has reported an average performance of about 10%. The actual averages from true analysis show it's about 7 to 8%, which is not terribly far off, but still, 2 to 3% is not some statistical anomaly, especially when it amounts to a discrepancy of trillions of dollars over 45 years. So just be cognizant. You can't have a drop in consumer spending, a broken real estate market, and continue to conduct bailouts while seemingly having the best growth in the world. Something is clearly amiss in China's numbers, and we all just need to be aware that they probably are lying about that.